let's get here. This is the big spike up and down. This is what happened for the TC data. Now, the data by itself is good. There's uh, how do I say that? But it's not the data that matters to us. It's how the market perceives the data that matters to us, right? The data could be anything. Data could be, Powell coming in and giving checks to everybody, but how the market perceives it, that's how we want to be playing. Right. So here, it's okay if you're trading, shorter term right now, and very likely if it breaches right here, this 100 moving average, it's going to go down into 38.43. But this is not where the action is. I was watching here this chart. So basically, the idea is the same. The downside is, as I put in my note yesterday and today, 37.85, 37.75. This line is the downside. If it starts to come back down, this is where we're looking for another logical bounce. To the upside, this blue line, this was a little up when the data came out. It was at about 38.76, right about here. As the market pulled down, and that's why these lines are dynamic. These lines adjust to the data, and it is hitting a resistance here, and it is stopping at the resistance right now. So unless it clears the resistance to the upside, this 38.71 area, I'm not really looking forward for any more upside. If it does clear the 5 on the day, then we're looking forward for a push into 38.81, and then the 8 at 38.89 to 38.90. There are bright chances of this happening. Why? Because Apple and Microsoft and Tesla, all of those, the big stocks are still holding to the upside. We'll see that in a minute, but that's what is happening. The big stocks are still holding to the upside. Where is Give me a second, guys. My Tesla is behaving a little weird. All right, cool. Okay, so going here, this chart, this is the weekly chart. This is suggesting further downside, perhaps the 37.56. But this is again, this is a bigger picture, right? To the upside, we still have 39.16, 39.20. If that clears, 39.30 to 39.40, and probably the 40.92. Let's round up at 49 or 41. That's a bigger picture to the upside, and to the downside, 36.63 to 36.50 area. This is the bigger picture. The 50 moving average to the upside, the 200 moving average to the downside. This is if you're tactically, if you're a long-term, kind of a player. If you are creating a strategy, this is where you would put your upside, and this is where you would put your downside. But that's a bigger picture for anybody who does it. This is how you want to play it. The upside 50 moving average for the week, downside 200 moving average on the week. So it's getting narrower. So that means it's going to get squeezed at some point in time. But besides that, and right here, yeah, we discussed the upside, and probably let's say right here, 38.15 again will should act as 38.15 should act again as a decent bounce spot. But if that breaches again, we have this further downside, 37.80 to 37.75 range. That would mean about what we are about now. I think it's 25 points, 25, roughly 25 points difference now between the ES and the SPX. If the ES pushes down into 37.80, 37, then SPX we should be expecting somewhere between 37.50 to 37.55. Yesterday, that was supposed to happen, did not happen. But today, if today again being a Friday, right? Today being a Friday, that push might just happen towards the later half of the session. And then I don't believe anybody would want to hold the trade into the weekend. So we might see some push to the downside. And if this should act as pretty decent resistance right about here, 37.80 area. But if this breaches, then obviously we're going to go push into this 37.33, then very likely 36.50 area. Now, coming back to DXY. DXY is still pinned down, and that is why you're not seeing a major reaction in the ES. Right, the DXY is still pinned below here, and even though we see the 10-year moving up. Basically, the 10-year has moved about 30 basis point from 3.42 3.42 area bounce to 3.72 area bounce, right? That is a 30 basis point move to the upside, but DXY did not move alongside 10, simply because because of the actions in by the BOJ, and the Asian currencies are still performing better compared to DXY. Now, what are we looking at? Again, this is a going forward issue. We want to be watching Japanese CPI. That's what we want to be watching. So, if the Japanese CPI will affect the dollar a lot, expecting the Japanese inflation to keep climbing, and expecting the negative yields now at least the 2 year in the Japan is now positive, and they are experiencing some sort of a decent inflation, which they were wishing for a long time. I think now the Japan is going towards policy normalization, right? They've been living with the negative interest rate for a long time. Now it's their chance. I think BOJ governor, that's what he's trying to engineer, an exit from that ultra low interest rates. So that would bode well for yen. For how long? I don't know. And as soon as yen loses its luster, I think dollar will pick up again. But for now, dollar is pinned down because of that move in BOJ's monetary policy. Right. So as long as this remains, tied down. When I say this, I mean the DXY, the dollar index, remains tied down. I think it will hold the markets. The markets will hold. And if we see any movement in the upside for DXY, I think the market will start to push to the downside. Right. Now that's what is happening with the DXY, and the story doesn't change. Same thing from yesterday, right? And let's go here and right about here. Where is that? Is okay, right here. So this chart is still intact. 5 8, if that clears, again the same thing here, we're going to test this 104.60. Now yesterday it was 104.70, now it has come down to 104.60, and the mean has still come down here. Probably if the mean reversion happens, obviously 104.90 to 105, and very likely if it takes the path to the upside, we'll see the market push to the downside. And what I'm watching today is this guy, the 10-year. The 10-year, we were plotting this yesterday. We have our recording. If anybody wants to go back and listen to it, uh, into this number right here yesterday, right? Because yesterday this line was right about here, a little bit below 3.74 something, but this line has moved up. So 3.75, 3.76 is what we are looking at for the 10-year. If it reaches this number and starts to move up into 3.91, that is again, that would be seen as Fed gets emboldened to keep raising rates. So what would that mean? If Fed goes with another 50 bips for Feb, then I think it will push the markets down, right? And the second thing, besides all of these data points, yada yada yada, what we don't have is what we need to consider is the COVID situation in China. That thing is getting out of control there, and I don't know if anybody. I don't know how that's going to play out. It's been reported that about 5,000 deaths and about I don't know 37 million infections or something like that. So that is happening. The funeral homes are getting queued up, and the hospitals are getting overburdened. So watch that data. We don't have data here, but you need to be resourceful about that. From Chinese, I don't know, government websites, or wherever that you get that data from. I think best source is still Twitter to get that kind of data and have an informed view about that. That data we cannot put in any charts or anything. but seems like Shanghai is getting hit pretty hard, and it's one of the largest GDP generators for China. However, the government is saying that it's going to be a temporary thing, and later on, the government's policies for growth will kick in, and China will be about 5%, roughly 5%. That's what they're saying. And also, India will be about 7%. That's what they're saying, about 7.3%. So if that happens, if that materializes, that China gives 5% and India gives 7%, then you will have the next year pretty smooth going into probably after the Q1. And if that doesn't work out, and then China, reopen falters, and India doesn't produce that 7%, then very likely it will affect the markets here, because the major indices have companies which are multinational, right? So multinational companies will get hit, and that will bring down the indices as well. So yeah, if that happens, you're looking at probably, I don't know, about 3,300, as a bear case. Well, and if things worsen, probably about 3,000. So that would mean where from where the SPX is right now, another about 20%. A big deal? No, not a big deal. We have dealt with that 20% for this year. We'll deal with the 20% next year. But the velocity of that move, that 20% move to the downside, it took about a year, a good 8 months for the SPX to move from 48 to 38. And if that kind of move, let's say 10% move happens in a short period of time, let's say about 3 to 4 months, from January to March and April, that will be disastrous, right? That will be simply disastrous if that happens. Uh, I don't I don't know if that's going to happen or not, but the 5% move is pretty much in line. I think I'm expecting a 5% move, probably about 32, 5 to 7%. Let me put it that way. 5 to 7% move is pretty much okay with the SPX going into first quarter, and that is again a bear case scenario. It's not a worst case scenario. Bear case scenario is about 30 to 50. And a lot of things have to happen for that 30 to 50 to get hit. First, the earnings contraction should be visible in the coming upcoming earnings, and then you should also have some impact from China reopen play. So if that combination happens to the downside, then very likely we'll see 32, 30 to 50 on board with SPX. If not, I think we are still okay with let's get SPX here. Where is SPX? Right. So this is a weekly chart, and if it breaches right about here, 3680, 3660, this is the number that I'm watching right about here. 35 50 to 3570 area, right? The 50 moving average, basically the 50 moving average where it bounced last time. This is what I'm watching to the downside. If it breaches that, then very likely that's where the panic will start to come in, and then very likely it's going to hit this 3,300 and bounce. That's the idea, right? As of now, that's the idea. Not plotting this number as of now, 2940 or 2950. Not really plotting this number as of now. If this happens, then there should be very good reason for this to happen. Then the market is expecting a very deep recession sort of a scenario, and the Chinese reopen has definitely faltered. If the market has come down all the way here to 2950. So that's a dire case scenario. I don't believe that's going to happen. But this number from about 3550 to about, let's say, 33 3250. So that's where I'm sitting with my downside case. Right. Okay. The 10-year. So the 10-year bouncing, if the 10-year bounces all the way here, maybe expect another breather, 3.75, 3.76. And if it starts to push down, 3.68, and then probably again a stop at 3.62. This is how I'm viewing the 10-year as of now. And let's get to the same data on the daily. So it is hitting the second standard deviation, very likely a breather right about here. And if it clears the second standard deviation, then we got to deal with 3.81, and then we have to deal with 3.87 to 3.88. And this is, again, if it happens today, then very likely the market will start to slide to the downside. And it being Friday, the market might accelerate to the downside and hit that 3750 number. But as of now, what I'm seeing in DXY, even with the US 10 moving higher, the DXY is still tamed. That is telling me that the markets will hold as of now. That scenario might change going into the live trading. But as of now, the technicals are suggesting that DXY is holding, even with the 10-year moving up. So I think the market will hold. The other thing that we are watching is this guy. So if the data is if the data is good, and if the market is perceiving that data to be negative, obviously good news, bad news, good news is bad news kind of scenario, then VIX should have been much more higher here. But VIX is not higher, and I'll not be taking VIX seriously until it clears this 21 on the day, right about here, 2220. This is the 21 moving average. Wherever that 21 moving average will be, I will only take VIX seriously if it clears here, or at least on Heikanashu here, 2250 area. If it clears that, then very likely push again into 2314, then again push into 2390 to 24. To the downside, if it starts to breach here, and right now it's holding the 5, and right about here, the lower band, 2133, if that breaches, then again a push all the way down here into 2050. Yesterday's trade was a VIX based trade, right about here, right? This is what we saw in VIX, and this is what we tracked. This is what I was live streaming, if anybody remembers yesterday. So again today, the same. Let's look at VIX here. VIX should be oversold here. There. Right. So it got oversold. It is bouncing, and it was in a squeeze here, came back down, hit a major moving average, got oversold, bounce. Now to the upside, if it clears this line right here, this line is the baseline, the red line here. If it clears there, 2180, then the mean reversion for the 15-minute will happen at 2187, and the upside 2194 again into 22. This is the upside case, and to the downside, again, we are looking at first a hit of 2158, then probably this purple line, the 200 moving average. If that breaches, then we are looking forward for 2120. If you're trading, this is where I would recommend you trading that VIX, or go here, right? If you're a short-term trader, and if you trade in minutes, this is where you want to be watching VIX. But use this as a guide. This is still pointing down, and well, the green line starting to curl to the upside. Uh, right now, it's not clear which direction it will pick, because the RSI is all the way down here. Williams R is all the way down here, but it was clear here that it would come down. Right now, we got to wait for some more data to get populated. Perhaps if it breaches the mean here, then again a test of 2144, it'll try to bounce there again. That breaches about 2127. So let's take a call if it breaches below 2127, 2125. And if it breaches there, then very likely we're going to see this number get tested, 2018. We'll look for another bounce there. The upside, if it clears right about here, the 5, the 8, and then the mean, and then the baseline 22, then again the top around 2230, 2234, and if that clears 2252, right? So that's the downside path, and that's the upside path. Until it clears one of these lines or one of these boundaries, I'm okay trading. I'll be okay trading with it, but not putting on any big positions. Right. And what else? Apple. Let's get into Apple. Apple is holding, even with that data point coming out and all that happening. Apple is still holding. The bigger picture for Apple, to the upside, 138 to 139 upside, and the downside is still sitting at about 127, 127.50. And I think looking at the RSI on the week, it is almost pulled down here at the bottom of the range. Williams R is down here at the bottom of the range, and yeah, that would make for a technical bounce. But if this green line comes down all the way here, then bounces, that would make much more of a conviction bounce, right? Uh, and let's go here on the daily. Where is that? So here, yesterday we saw a pale green, pale red bar. Day before yesterday was a pale red bar. Yesterday was a pale red bar. SMI still crossed. So maybe we can expect another push to the upside, perhaps a test of 5 again. 134.40. If that clears, again a test of 135.80 to the upside. To the downside, again, the range remains the same, 130.50. That breaches, will go look for another data point here and looking for a bounce around 130 and then probably 128.90. And I'll be trading on this chart. Right, the mean reversion right here. This is what I was talking about. It hit the mean, took a breather from there. Now to the downside, if it starts to push to the downside, we'll look for 130.99. Let's rather put it at 131. That breaches right about here, 130.64. That breaches 129.70. That breaches 128. I don't know if that's in the card to test 128, but if that happens, fair enough. We'll still look for a downside. But as of now, I think we want to see a bounce either right about here or right about here, 131 area. Right? To the upside, if it clears, if it clears right here, 130 for 95 to 132, 5 and 8. Then we are looking for upside again into 132.43. The same thing, right? Next moving average. Again, the mean is sitting at about 133. So if the bounce comes in around 10 after the housing data comes in, probably it will come back up here at 133. If it clears 133, then we are looking for a push into 133.79. Yesterday, the trade was, where is the trade for yesterday? At this chart. Okay, this is the chart that we were watching for a trade yesterday, right? And right till here, 132 and a break. Right, what are we looking at? Okay, so we just discussed this chart, right? So let's get into Tesla a little bit here. I think we still have 7 minutes. Tesla, again, this is news based and technicals are exhausted. We can't do much. If it were a technical play, this would have been bouncing right about now, but it's institutional sellers. That's where it is coming from, and Tesla being one of the high PE multiple stocks, it is getting crushed right now. And the technicals here, even on the daily, are definitely suggesting a bounce. And yesterday, Elon said he will not sell any more stocks, so hopefully he doesn't, and hopefully the selling stops. If it does, then it will pull up all the way, perhaps into 138.85 area. And from where the price is and where the anchor is, if even if you take what do you call the average, probably about 132 is what I'm looking at for Tesla if the bounce comes in. Yeah, and I am holding a lot of equity on Tesla, and most likely I'll exit my puts here as soon as the market opens. And if it goes down again, then I'll put on the puts trade again. But I think I'll take profits on my puts and probably hold the losses on the equity, right? And probably try to recover those losses. That will be a paper loss, right? That will not be a real loss because I've made more than what I lost on the equity in my options. So that will be a paper loss, and it would be nice if it bounces and perhaps hits this number 139 and probably 146 after that. Not a no, I don't think this is a story for today. 146 is definitely not a story for today. Probably I'm expecting somewhere about, if it hits this one with the second standard deviation, 129.50, and then if it closes above that 130 range, then very likely next week we are looking for a hit of 5. But the thing that is apparent here is that it is oversold here, and it is detached from its anchor moving average. So unless the algos are tweaked, the algos will pick up on this, and very likely it'll start to bounce. And I'm still waiting on this SMI to cross. SMI is down all the way here at negative 80, or better than negative 80 actually. It hasn't happened in at least in the recent times that SMI has gone down all the way at negative 80. And look at this thing. This is the regular RSI. It's all the way down here at 20. That hasn't happened. We haven't seen that in a long while. So there are bright chances of Tesla bouncing. And again, I will exit my puts, and I will continue to hold the equity, which I'm holding for a loss right now. All right. Let's get into Tesla here in the 1 hour chart. So if this is not the scenario here where the MFI was all the way down here, but still Tesla is still in an upward movement here. So hopefully if it can clear this 5 and 8 about 127.20, 127.50 area, then expecting it to hit this resistance again 128.73, and the mean reversion on the hour should happen about 130.62, and if that clears, very likely 132. This is what I'm looking at as my base case to the upside, 132.50 if the mean clears. And probably if that clears, then 135. So to the downside, again, if it pushes down 124.30, and after that, if the market's selling deepers, and 119, and then probably end up around 114. All right. That was good. We still have 3 minutes. Uh, Anybody, anything in particular? All right, cool. Let's move to live trading.